All right, let's get right into it. Today, we are targeting a goal that pretty much every serious market operator chases, but honestly, very few actually achieve. We're talking about building a fixed, unshakable daily analysis routine for gold. Look, if you've been trading XAUUSD for any amount of time, you already know how incredibly volatile and totally unforgiving it can be. It's a beast. So we are going to break down exactly how to permanently eliminate emotional trading by relying on a structured, completely repeatable blueprint, stripping away all the noise and focusing on a step-by-step daily process. That is exactly how you conquer the gold market with absolute clarity.
So I need you to answer this honestly right now. Are you actually trading gold, or are you just gambling? It's a harsh reality check, I know, but it's absolutely the most necessary question you're going to ask yourself today. Think about it. When you open your charts in the morning, do you rely on a strict, repeatable process? Or are you letting fear, greed, and just random gut feelings dictate your account balance? Because here's the truth. Every single time you hit that buy or sell button without a predefined checklist, you're literally just pulling the lever on a slot machine. And in the gold market, yeah, the house always wins against a gambler.
Now, what's really interesting about this is the vivid contrast between two completely different realities in trading. On one side, we have random chart checking. This is where the agonizing pain of blown accounts lives. It's waking up, staring at a chart literally covered in moving averages and oscillators, feeling impulsive and just blindly chasing green candles. It's chaotic, it's stressful, and it's entirely emotional. But on the exact opposite side, we have the daily trading blueprint. This right here is where professional profitability lives. It's structured, it's calm, and it relies on pure price action. Making the shift from random impulse to a definitive daily routine is without a doubt the defining transformation of a successful trader.
Okay, let's dive into this. Here is our highly structured checklist for today. First, we'll cover top-down market analysis, taking it from the macro down to the micro. Second, we'll look at timing your trades around the London and New York sessions. Third, pinpointing your exact entry confirmations. Fourth, establishing strict risk management rules. And finally, the psychology of a routine.
All right, Section 1, top-down market analysis, macro to micro. This is step 0. It's the very first thing every process-driven trader does when they sit down at their desk.
Let's walk through this chronologically because the sequence matters. Listen, you never, and I mean never, start your day by pulling up the 5-minute chart. Step 1 is locking in your higher time frame bias. You got to zoom out to the daily or the weekly chart. Is gold making higher highs, or did we just heavily reject a major supply zone? Say the daily chart just swept a prior high right around the 2050 level and rejected hard. Well, that's a massive, critical narrative. Step 2, mark out your historical support and resistance. Then step 3 is identifying those liquidity zones. Ask yourself, where are the resting stop losses? Did price just leave a massive pool of unswept buy-side liquidity? Once you have that whole macro map drawn out, then you hit step 4. Drop down to your 15-minute chart for your intraday structure analysis. That's where you connect the daily narrative to a highly localized, actionable plan.
To actually execute that top-down analysis, you absolutely must master market structure essentials, focusing heavily on pure price action. We're looking to locate real institutional order flow, things like ICT and smart money concept zones, just by reading what the actual candles are doing. You'll notice the most consistent gold traders completely avoid relying on cluttered, lagging indicators. You really don't need a stochastic oscillator to tell you the market structure is shifting. Mastering the core structure, identifying fair value gaps, and reading liquidity sweeps, that is precisely how the pros strip away all the retail noise and discover what the market actually intends to do.
Moving right along to Section 2, London and New York sessions. This is all about timing your trade.
You have to realize that market volume and behavior dramatically shift depending on which session is currently active. The London session typically brings in that initial heavy volume for the day, right? In fact, it very often sets the actual high or low of the day, establishing our initial trend. And then you have the New York session. This is where absolute peak volatility hits, especially during that overlap window when London is still awake. Often New York will aggressively expand on London's trend, or, and this happens all the time with gold, it might create a violently aggressive reversal. It might drop just to sweep London's initial low, grab all that liquidity, and then reverse heavily back to the upside. You have to know exactly which session you're in because your specific setup must align with that session's unique volume profile.
And this brilliantly illustrates why navigating fundamental news is it's absolutely mandatory. You can have the most beautiful, pristine technical setup in the world, literally picture perfect, but if you ignore the economic calendar, you're going to get wiped out. Every single morning, you check for Fed rate decisions, CPI data drops, FOMC releases. Understand that pre- and post-news volatility will easily smash right through regular technical zones. I mean, we've all seen gold spike 200 pips in a single minute during CPI, right? Professional traders either sit completely on the sidelines during high-impact news, or they have a highly specific, back-tested plan for that exact volatility. There is no in-between.
All right, Section 3, finding entry confirmations. We're down to the micro level now, the actual execution. So a confirmation signal is a specific, highly repeatable price action logic that occurs within your high probability zone and triggers a valid trade entry. You never ever just throw a limit order at a key level and hope for the best. No way. When the price reaches your mapped out zone, you literally sit on your hands. You demand that the market proves it actually wants to move. Let's say gold taps your 15-minute demand zone. You wait. You drop down to the 1-minute or 5-minute chart and you look for a clear market structure shift. You want to see energetic displacement leaving behind a clear fair value gap. That right there is a confirmation. Demanding this level of proof is the ultimate shield. It completely protects you from jumping into early, random entries outside of your plan.
1. Just 1. This number represents the absolute ultimate power of mastering a single, highly accurate setup. Listen to me on this. You do not need to juggle a dozen unproven, complicated strategies to be profitable in gold. You just don't. Find one preferred setup, master it completely inside and out, and just wait for it to appear in your designated trading session. Bruce Lee famously said he feared the man who practiced one kick 10,000 times, not 10,000 kicks one time. In trading XAUUSD, you want to be the person who executes one perfectly planned setup 10,000 times.
Okay, Section 4, strict risk management rules. This is the true dividing line between the pros and the amateurs. Capital protection.
Knowing your invalidation level before entering a trade is completely non-negotiable, period. Your invalidation level is the exact price point on the chart where your technical trade idea is definitively proven wrong. Not maybe wrong, but definitively wrong. If price reaches this point, you do not hope, you do not pray, and you certainly never ever widen your stop loss. You just accept that the specific premise for your trade is invalid, and you exit immediately. On to the next one.
You really have to treat your trading like a professional business with incredibly strict protocols. So here is your procedural pre-flight risk checklist. Number 1. Calculate pre-planned stop losses based purely on that invalidation level we literally just talked about. Number 2. Maintain a fixed risk per trade. Whether you risk 1% or 0.5% of your account, you adjust your lot size so the monetary risk never changes based on how confident you happen to feel that day. And number 3, strictly avoid all random entries outside the trading plan. If the setup isn't explicitly detailed in your blueprint, you don't click the mouse. End of story.
And finally, Section 5, the psychology of a routine, bringing it all together with discipline and patience.
So the crucial point here is comparing these two mindsets. Consider the emotional trader. They overanalyze every little tick, they totally lack consistency, and the second they take a loss, they immediately revenge trade to try and win it back. It's exhausting. Now contrast that with the process trader. They are fiercely disciplined, incredibly patient, and they literally just blindly repeat their daily routine regardless of what happened yesterday. Long-term profitability only comes from acting like the emotionless process trader. Believe it or not, you actually want your trading to be boring, mechanical, highly structured. You want to completely starve those emotional highs and lows of their power.
Let this sink in. Discipline and patience, forged through a fixed daily routine, are your only true edge in conquering the gold market. It's true. Your edge isn't some secret indicator, and it's certainly not outsmarting a billion-dollar algorithmic trading bot. Your true edge is your unwavering ability to wake up, execute your top-down analysis, wait patiently for your session, demand strict confirmation, apply your risk management, and then do it all over again tomorrow without ever letting emotion take the wheel.
And that brings us to the end of the blueprint. Before you go, I want to leave you with a question to really think about. And hey, let me know your answers down below. What does your daily gold analysis routine look like right now? Seriously, what is the very first thing you check when you sit down at your desk? Take the concepts we've explored today, start structuring your own morning checklist, and get out there and execute your trading day like a true professional. Thanks so much for joining me on this explainer, and stay focused out there.